Welcome back. You're watching Traders Corner, and joining me as always is Garth McKenzie, founder and editor of Traders Corner. Garth, welcome.
Thanks.
Although I'm not sure how welcome this is, and this is where you get to wear a hair shirt for the next 15 minutes to lament over the last couple of weeks, because last week was a pre-recorded show, and today we dissect the full horror of the portfolio.
Yeah, that's right. I mean, I was able to kind of hide behind an options educational show last week because I was away in Cape Town on a trip, but this week we have to kind of come clean with where we are, and let's just display our portfolio and what's happened. And it's, you know, not often that I come in here and I sort of dread having to make the drive into the studio to report back to the nation on what's been going on in our portfolio. But this year hasn't been easy, and this week has been, or last 2 weeks effectively, has been a very tough week. Because we were looking quite good on our portfolio actually 2 weeks ago when we did a last recording. And things have kind of, the wheels have fallen off a little bit. Not that they've fallen off, it's just that...
I suppose the way you've positioned yourself hasn't worked out, essentially.
Yeah, that's right. And this big rally that we've seen in the market, I wasn't positioned for that at all. And the market rally has caught me off guard. So I think as we get into the slides this evening, you'll see more and more what's happened and why the story is not that great, unfortunately.
Yeah. Let's start off with the S&P 500, which is a market that's been really strong, and you have taken a position against it coming off a bit. Do you still, I mean, given the current or the market action of the last couple of weeks, do you still see that as a possibility?
Yeah, look, I mean, here's the chart of the S&P 500 at the moment, and what's evident here, I mean, this is a strong chart, there's no doubt about that. It is a fairly firm chart. And you can see it's just been grinding higher and higher and higher over the last couple of weeks. Very, very shallow pullbacks on this market. When it does pull back, it doesn't pull back more than about 2%. I mean, I read somewhere the other day that there hasn't been more than a 5% pullback on the S&P 500. I think it's over 270 trading days. So more than a year, effectively. I think that was the statistic. But, you know, and a 5% pullback is not a big pullback. And that also talks to the fact that the VIX is so very, very low. I mean, the VIX index, the volatility index at the moment is at all-time lows, and it's breaking new records for being at all-time lows that we've never ever seen in the history of the VIX. So it does make the trading conditions difficult. But having said that, I mean, if we look at this S&P 500 graph, it is still quite constructive. You can see it's still making higher lows and higher highs. The breakout through 2400 in May was a bullish break. We saw it consolidate, and now it's on another leg to the upside. It looks now as if it may be beginning to consolidate again. But you know, how much does it pull back? There's support that comes in at 2440, which is that uptrend support over there. That corresponds with the 50-day moving average at more or less the same level. So if the market were to pull back from the current level of 2480 back to there, that's only 40 points. That's not even 2% on the S&P 500, and then it's back at support. So we'll have to see. In terms of where we are positioned, we did do an option structure. We've got a put spread option structure that runs out to September this year, and you can see the payoff of that structure on the right-hand side over there. So above 24.30, we are losing $240 in premium, and then below 24.30, we make money. But you know, as I look at this, it's becoming more and more sort of questionable to me whether we're actually going to get a profitable result out of this trade. It certainly doesn't feel like this market wants to come down anytime soon. So, you know, but we're in it. We're in it. We know that we've paid our premium. We've accounted for it. Let's see what happens over the coming weeks. There is still about 7 weeks to go, and 7 weeks can be a long time in the market.
I suppose you actually still have to remind yourself at this point that the reason why you've taken it's a hedge in case of a market pulling back. So it's not a naked short. So if you had great convictions that the market was going to pull back, I suppose you would have gone on enacted some sort of naked short structure for the portfolio, but you haven't. So
that is correct. Yeah, that is correct, and that's the one, I suppose, saving grace, is that we know by doing it via an option structure like we've done here, it's not a naked short. If the market continues to rise, we know exactly what our loss is going to be. It's going to be that premium of $240. If the market were to come lower, then it can move into that sweet spot where we would make some money. But you're right, it's not a naked short position. And from that point of view, I suppose I am comforted in the sense that we're not losing money if the market rises, but at the same time, we're not involved on the long side. And as it goes higher, it's frustrating to see it because it's going higher and we're not positioned in the right way for that.
I know. I mean, you know, so looking back now, you should have just gone long of the S&P 500 at the beginning of the year and just run a position.
Absolutely. I mean, you'd be up about 10% in dollar terms on the S&P 500 if you had done that at the beginning of this year.
Just one last comment though. Are you tempted to go long the S&P at this point, or do you think you would just be coming in way too late?
Yeah, I wouldn't be going long at this point in time. I think if it gave a little bit of a pullback towards that support area that I've mentioned and it held that level and it reversed up from there, possibly then I could look at going long. Also in the knowledge that we've got an options protection on the downside. So that could also give us sort of some comfort if we wanted to go long. But I think let's just monitor it and see. You know, my strategy was to look for seasonal weakness during the months of August and September. We've only just started August, so I might still be right. But it doesn't feel like it at the moment. But like I said, 7 weeks in the market can be a long time. And seasonally, August into September is actually seasonally normally quite a weak period for the markets. So let's see whether it still plays out this year.
Okay, let's bring it back home to the top 40, which I suppose is where you must be gnashing your teeth.
Yeah, very much so. So we're going to look at this from a couple of angles, this top 40 index. We're going to start with the really recent trading action, then we're going to zoom out a bit. This is a top 40 futures chart over here, and the reason I show the top 40 futures is because this is where we have our option structure for the September futures closeout. So there's the graph of it. You can see we had that big sell-off in June, and then we started rallying from the middle of June and through the beginning of July. And now this market has basically moved up 4,500 points in pretty much a straight line. I certainly didn't see that coming. You know, if we go back 3 weeks, I actually was looking at this thinking, oh, this thing looks like it's vulnerable to breaking to the downside and having another leg lower and maybe visiting 44,000. Well, now fast forward, you know, only 3 weeks, and so here we are sitting knocking on new all-time highs on this market. You can see very, very steady uptrend, no pullback. It's basically gone up 10% in a straight line without even pulling back at all, really.
And this is in a month alone. I mean, this is what, and we tend to, while you're in it, you tend to forget sometimes how extraordinary moves can be. But this has been a fairly extraordinary move.
It has been a pretty extraordinary move. 10% in a month is a massive move. And a lot of it's come from Naspers and some of the resources shares, really. If I look at this, though, there was a big gap up yesterday, and I sort of ask myself, is that possibly an exhaustion gap at the end of this long move to the upside? It's possible. We'll see how the coming days look. There is negative divergence on the RSI down here, which indicates that maybe this upward move is beginning to slow down and run out of momentum. So let's see. Our option structure is illustrated on the right-hand side over here. We will make money below 48,000 on this, and our sweet spot is below 46,000 and down to 44,000. So, and this expires on the 21st of September. So it's 7 weeks' time. We've still got the potential to make money out of this thing if the market were to pull back and go lower through August and into September. So, you know, it's not the end of the world. What is frustrating, though, is that back in middle June or early July, we were sitting with a very nice theoretical mark-to-market profit on those options, which has now completely been erased.
Yeah.
We were down in the sweet spot of that option structure there. We're now back in the point where we're actually losing our premium of 2,300 Rand. You know, obviously we have to go into a trade accepting that is one of the scenarios. We're going to possibly lose our premium, and we know that. It's just annoying when you go into the money. And the problem with these structures is that I do need to kind of run it out to expiry because I can't lock in that profit at the sweet spot so early on in the contract period. It's not possible to do because of the pricing of the options. So I now sit in a situation where we were looking fantastic and now it's all disappeared. It's vanished.
Yeah, I suppose it's a lesson. Don't count your mark-to-market profits until they've ka-chinged in your bank account.
Yeah.
And I suppose you're also quite frustrated because you cashed in 2 all-me positions that you had, in other words, an exposure to the long side of the markets. And if you'd run those out, I suppose you'd be looking a little bit better right now.
Yeah, that's right. We did have some all-me futures which we bought back in June sometime, and we closed those out about 2 weeks ago. I identified what was an evening star reversal on the top 40 futures. You can see I'm pointing it out there at the moment. And that was a reversal, and I thought, okay, well, it looks as if this rally's probably done its thing now and it's going to come lower. So I took the opportunity to bank profits on those all-me futures. We now sit 1,500 points higher, so that we would have made even more money on those. But alas, we didn't stay in the trade.
Yeah. Garth, you've got a couple of other charts of the top 40, the spots, and then also the top 40 over a longer time frame.
Yeah, I just want to look at the top 40 spot looking back a little bit further out now. So this is where we're zooming out. So here you can see the top 40 spot going back to October of last year. So we're talking about, 8 or 9 months of trade here. And what is quite interesting to note is this upward sloping channel that is evident on the top 40. And you can see we're now getting very, very close to the top of that channel. Where I've indicated these dotted lines over here, what that tells you is where the RSI has given you a sell signal. So what happens is your RSI goes above 70, which which is above the top of this little lateral resistance line at the top here, goes above 70 and back underneath 70. That is an RSI sell signal. And you can see the last number of sell signals have been fairly accurate in identifying a top. Now, we're at a situation now where our RSI is above 70 at the moment, so it's probably going to cross back underneath 70 soon, and that will give us an RSI sell signal, and that could very well indicate the market coming back off a little bit, like it has on the previous couple of occasions. So I wouldn't be chasing this market at this level, given that setup.
And if you look at where we are over a longer sort of time frame, we're in fact only just now breaking out of this moribund channel we've been in.
Yeah, well, that's it. We're not even quite breaking out yet. We're testing the top of it.
Testing it, rather.
So, I mean, this is now 3 years worth of trade on the top 40 index. And you can see this market's been very choppy, very range-bound, between 41,500 and up to 49,000 at the upper level. There you can see on the right-hand side, that's that channel that we looked at on the previous graph. So we've just zoomed out even further here to get to this. And you can see the market pushing up against this 49,000 overhead resistance. There are a lot of guys that I see getting excited about the possibility of a breakout through here. I'm a little bit more circumspect about that. I think given that we've had such a powerful rally here, I'd be wary of chasing a breakout here. Yes, it might break through the resistance, but will it continue, and will it be a real break or will it be a false break? And I'm sort of sitting in the camp where I'd be reluctant to chase a breakout here because it might very well suck you in and spit you out.
Yeah. Okay, well, talking about being spat out, let's have a look at the trade in BarloWorld, which is a short position. And I must say, instinctively, I would also go short BarloWorld, just given the state of the South African economy, and yet it's gone against you.
It has. So here's the chart of BarloWorld and why we went into the short trade. So we did this trade back in early July. And what we were looking at here was the fact that the share price had broken down below this lateral support area, which was at about 111 Rand. The price broke down, it then was consolidating underneath that level, and it rallied, it reversed down perfectly from the underside of the 50-day moving average and came back down. And that to me looked like a bear flag structure was likely to break to the downside again. So we took that as an opportunity to go short on that reversal, and I said at that stage I'd run a very loose stop loss above 120 Rand. And looking for the move down towards 100 and possibly even lower than that. It hasn't worked out. As you can see, the share price has continued to grind higher. It then made a little bull flag structure in the sort of third and fourth week of July there, and it's broken out to the upside. After that bull flag pattern broke out to the upside, I decided that was time to exit the trade. So I actually closed it before the stop loss triggered. Because I just felt I could see it was wrong. You could see there was buying activity in the share at those lower levels. So I bought back that short at 115 Rand 50, which meant that we lost 1,232 Rand, including all our costs. So it's not the end of the world. I mean, it's a 1% and a bit loss of capital. It's just another frustration because it's another loss that we chalk up.
Yeah. Okay. Well, let's tally up those losses and show people what the portfolio.
Yeah. So here's our South African portfolio. So you see our options premium. We're back where we were few weeks back on the option structure. No mark-to-market profit to talk about there anymore. Our ALMI futures, we made some money the other day, and then there's our loss on the BarloWorld trade that we've just discussed. So we're back at 104,000 Rand. It's only up 4% for the year to date. It's a long way off where we were 2-3 weeks back, where we were talking about the portfolio being up a theoretical 23% at that stage.
And the international profits, no change really?
No, well, there isn't even a profit to talk about here, and it's still minus 6.7% for the year to date. The only position we have here is the top 40, the S&P 500 options, which are underwater.
And very quickly to end off with, Garth, you do have a course coming up this month.
Yes, on the 19th of August, Joburg, I'm doing a high probability trading course. So anyone that's interested, please email me, garth@traderscorner.co.za, and I'll send you all the details.
Okay, we have to leave it there, unfortunately. Garth, thanks as always for joining us. Garth McKenzie is founder and editor of Traders Corner.